Okay, guys, welcome to Saturday webinar. Let's begin. Firstly, I want to apologize for yesterday. My dog has been put down. He was in a very serious condition. In fact, is how should I put it? It's about time also lah. He's like 15 years old. Like he's unable to walk and like in a way he finally passed on lah. So like there's no more pain lah. So anyway, I wasn't in a condition to like sort of speak coherently yesterday, so I thought I might as well cancel the meeting. But anyway, let's go through some of the stuff today lah. Okay. Anyway, we have a very um volatile market with the tariff coming in, the Liberation Day coming in, and of course, both the S&P 500 and Nasdaq dropped quite significantly lah. Okay. So now, this is on top of the initial drop that we already have. So this initial drop is definitely accounting for a certain level of tariff also, but beyond that, right? I believe the market wasn't expecting such a aggressive tariff coming in. Okay, so hence it is dropping a lot further. And for those who are not aware, if we look at the Nasdaq, Nasdaq has officially entered the bear market. Okay, the bear market definition is if you drop 20% from the top, from the recent high, it is considered a bear market already lah. Okay, so Nasdaq is now negative 21.94% from the top. S&P 500 not there yet, but very soon, very soon. It's somewhere around 17.45%. Okay, so if Monday or Tuesday, if the market continue to drop, right, then we will see substantial the S&P 500 will have gone into the bear market already lah. So now taking a look back at the year 2022 when we have interest rate going up, overall S&P dropped about 27%, and for Nasdaq, I think the drop was about 37%. Okay, so I am unable to tell whether if the drop is going to be this much, but at this point in time, right, I do believe that there is a bit of knee-jerk reaction. Also, the market is kind of having a little bit of overreaction lah. But one important thing that I want to point out is that usually in the case of tariff, right, the most common fear is the rise in inflation, because if you are raising costs across all the goods, right, then the consumers are going to pay more lah. Either consumers are going to pay more, or the companies themselves have to eat the cost, which in turn will reduce their margin. And if they decided not to eat the cost, they want to pass the costs down to the customers, then obviously customers' demand will reduce by a lot. So that's why you are seeing a lot of the discretionary stock doing quite bad also lah. Mainly Apple. Apple is the one that is hit worse due to the China tariff lah. Okay, so you are seeing quite a significant drop. But the interesting thing here is that if inflation fear is something that is very prevalent, then the kind of response that we will be seeing is the yield to be spiking up, not spiking down. So the fact that the yield are spiking down, right, it kind of tells us that there is another fear in place, which is the recessionary fear. So when yields are going down, right, it is more to do with recessionary fear lah. And in a way, right, it is mainly because the growth is going to slow down due to all the additional costs coming in. Companies are not able to spend as much, expand as much, and then maybe they may start cutting labor. Also, they may start cutting workforces, which in turn will lead to consumers not having enough money to spend due to the higher cost, or they are losing their job. and then it will have a lot of knock-on effect, and because of that, the recessionary fear is high lah. And the fact that we are seeing a very sharp drop in yield, right, it is telling us that the severity of the recession fear is much more prominent than the inflation fear. I think right now nobody really cares about inflation rate, inflation really lah, with the yield with the yield spiking down this much lah. Okay, and in fact you can see the 1 year yield is spiking down by quite a big amount also lah. Okay, so what this kind of tells us is that perhaps the market believe Federal Reserve have to cut rate lah. They must cut rate. If not, the decrease in growth is going to be quite bad. So on last Friday, in fact, I was so busy on Thursday and Friday dealing with my dog that I essentially forgot Friday was an NFP day. We are already in April already. So on NFP day, we see unemployment rate ticks up a little bit. But of course, unemployment rate is a lagging indicator lah. Okay, we wouldn't see the impact of tariff has on unemployment until maybe 2 or 3 months down the road. But perhaps by then, right, market already kind of price in a lot of the information already lah. But Powell actually gave a speech yesterday also, and during his speech, right, he didn't really say anything about rate cuts, but he mentioned that they are adopting a wait and see approach lah. Okay, so Powell basically not giving in to Donald Trump also, because Trump was coming out and say now Federal Reserve must cut rate. They cannot don't cut rate or all sorts of stuff lah. Okay, so now we have that dynamic ongoing also. So I guess what Powell want to do is that he probably want to wait and see how much the tariff affect the inflation numbers. And if the inflation numbers are not really affected by that much, and we are in fact seeing a huge decline in inflation, mainly because nobody is able to afford anything, right? Then perhaps rate cut will come in lah. But the issue with that plan is he have to wait. He have to wait for at least one inflation number. And I don't think that the inflation number that is coming up for April, it will be reflective of the tariff. He will probably have to wait until the May inflation number, which I believe is should be in time, because no, not in time. The next FOMC is in May. Okay, so they can see the April number, but April number will not be reflective, but they won't make it in time for the May's number lah. Okay, because the FOMC will happen first before the May number come out. So probably only by June then they will be able to see what is the inflation impact on what is the tariff impact on the inflation. Okay, so we got all these dynamic ongoing, and of course if you look at the overall stock market, right, there's nothing really to talk about, because it is just a mass sell down across everything. On Friday we have some weird movement happening, like the Lululemon going up. All the apparel stocks are going up. Lululemon, Buckle, Carter's. In fact, Victoria's Secret went up 12%, 13%. Which happens on Friday. So aside from the apparel, right, apparel sector, on holding also recover a bit. Almost every other sector is very red. So in a way, right, it is indiscriminate selling lah. Okay, it doesn't really matter if the company has any kind of negative impact from tariff, whatever, doesn't matter at all. Everything is just a mass sell down lah. Okay, so it is overall overreaction, I believe, happening at the moment. But going forward, we still have to wait and see if rate cuts are coming in or not lah. But in fact, if rate cuts are coming in, right, it might not be really good news also, because usually rate cuts come in during the time when the economic condition is quite bad lah. But it is good that Federal Reserve actually cut a big 50 basis point last year, and it kind of buffer this tariff blow that came in. Okay, so if you go to the CME website to watch what is the overall probability, it actually went up by quite a bit. So the probability of a rate cut on May is about 33.3%. 66.7% is still maintaining, okay? So still maintaining. So at this point, right, it's really very hard to say what will be the tariff impact, okay? But nonetheless, right, for us, I don't think we are that affected severely also, because I would say that even before the big spike downwards from the stock market happened, right, we were kind of prepared already. And in fact, right, majority of you should be benefiting massively from this big drop, because a lot of our positions are in fact positioned for downside. And in fact, right, for a lot of the short position that we have, the put options, they are all ratio calendar, or they are mainly ratio calendar. Ratio calendar don't really have a cap on downside, unlike vertical. Vertical, your downside is capped. Once it hit your short strike, right, your profit is pretty much maxed out already. You cannot win more than a certain amount. But almost every shot that we have, from Palantir to Starbucks, and I believe I think Builder First Source is vertical, but Palantir, Starbucks, and what's the other one? Do we have one more? I think we should have one more. Let's see. Palantir, Starbucks, Builder First Source. Yeah, Palantir, Starbucks, Builder First Source are I believe all mainly ratio calendars. Okay. So you should be getting a lot of profit from there also. And in fact, we remove a few other long position also. For example, we managed to remove Alcoa before the big drop come in. So that kind of helped us to buffer a bit. And then previously we got all the IWM, whatever, okay? So in fact, I was a little bit concerned, which is why I did a poll also. And you can see here from the poll, right? I am glad that in this kind of market condition, right, there are about 16 of you. I mean, among those who voted, okay, there's about 16 of you, which is basically like close to 50%, okay, 50%, exactly 50% of you are actually in green. If you are in the green, right, in fact, you are doing very well already. And some of you, those that are in green, majority of you are in the plus 10%, plus 20% range, which is very good. Two people has more than 20%, okay? So now, even if you are not in green, right, if you are down from 0 to minus 10, like, that's like, all right, it's not ideal. Maybe you didn't have enough long position, but it's still all right. And hopefully nobody, like, not the majority of you is less than 10%, okay? There's 1% lesser than 10%. So it's important to have short position at all time. If you are not willing to short when the market is going up, right, then you won't make it in time when the market is crashing already. So when the market start to crash, right, you won't you will feel that, yeah, I cannot, I couldn't get in already. I don't know what to short already, because we have shorted very long ago already. So you will not make it in time, okay? So it is very important to have short position at all time. And I really do hope that most of you who are in this webinar, there's only 32 vote, okay? There's like over 200, 300 subscribers, but I have only 32 votes. So hopefully those that didn't vote, right, you are doing well also with all the short positions, okay? So now, in fact, in this kind of situation that we are seeing right now, it is a very good opportunity to look out for things to play long position on. And this is, in fact, the best time to find something to long, okay? In fact, we can find something to long that is not really impacted by tariff, or we can go and find something to short that could be impacted by tariff, but the stock is still doing somewhat fine like that, like how's Chipotle doing? So I believe maybe Chipotle can drop some more, or maybe even Dick's Sporting Goods, I believe it can drop some more. It has been up there for very long already. Okay, it actually rallied quite significantly. Okay, so I am looking at a lot of what do you call that? Consumer discretionary, okay, things like Dick's Sporting Goods, or maybe other things like Nike, all those kind of stuff to short, okay? And things like Costco also. Costco dropped quite a bit also. So these are the some of shorts that I'm looking at. But for long position, right, there are a lot of long position that we can consider, but at this point in time, I wouldn't recommend to go bottom picking yet. Okay, I think the time for bottom picking is still early, but when the time comes, when the market do recover, when things are a little bit more clearer, I do believe that the recovery will be quite substantial. And due to the increase in volatility, right, you are managing risk on the downside on the way down, or if you manage to profit on the way down, that's even better. And when things eventually recover, right, we will definitely profit on the way up. And hopefully this year will be one of the best year that you can have for trading opportunity. Okay, in fact, previously during COVID-19, right, it was one of the best trading year because of the opportunity that was created by this very tough V-shape uh pattern that coming up in the market. Okay. And in fact, during the 2023, from 2023 also, the beginning of 2023 marks a very, very aggressive rally that came up also after this very big drop. So we probably will face a little bit of prolonged drop, and then when the recovery do come, we will catch the recovery also. Okay. So for now, we just remain neutral. We definitely need to have long position, but you don't want to overcommit to the short position also. Okay. So that's basically what I want to say. In fact, our strategy has always been the same. Try to have equal amount of long and shorts, just remain neutral. Okay, because obviously market is facing a little bit of challenges right now. So what could probably trigger a sudden V-shaped recovery is if Donald Trump remove the tariff for whatever reason. And I'm sure you all have been seeing some news also about how the tariff number came about. Those are simply just the trade deficit that US have between certain countries, and even some island near Antarctica has been hit with tariff also when there's nobody living on them. There's like only penguin living on those islands. They have been hit with tariff also. So perhaps maybe Donald Trump may go back on his plan, because right now everybody is like making fun of him. Or perhaps when the rate cuts do come in during May, when Jerome Powell gives the rate cut, then market can probably recover also lah, provided that inflation is not the issue lah. And I do believe that that is the best case situation where Donald Trump actually pulled back on the tariff a bit. It's not that he cannot do tariff. He want tariff fine, but not so crazy like what we are seeing right now lah. Even Singapore got 10% tariff for no apparent reason, simply because any countries that US does not have trade deficit get a blanket 10%. Okay. So maybe Donald Trump pulled back a little bit on the tariff, and then we have inflation number coming out to say that inflation has drastically gone down, and Jerome Powell provide a rate cut on May before things become very, very dire. Okay. And that will be the best trigger for market rally. So we can probably watch for that. Okay. It is important to understand what is going on at a macroeconomic level. And on a macroeconomic level, you do need to understand what could trigger a recovery in the overall market. Okay. We are not talking about specific company fundamentals, but rather the broad market itself. So we do need to look out for those kind of stuff. Okay. So from now until the May FOMC, we do have earnings season coming in. The first quarter earning is coming out. We are in second quarter now. Okay. So the first quarter's earning are coming out. Maybe the earning can give us a little bit of insight into what's going on also. Okay. It can probably do a little bit of recovery, but I don't think there will be a mass recovery that will happen until sometime around May. Okay, so now looking at the ISM, we have ISM report that came out already also. For both manufacturing and service kind of drop lah. Okay, manufacturing is now back below 50 already. It is back to contraction, and in fact there's a lot of tariff related comment also lah. Okay. and customers are pulling in orders due to anxiety about continued tariff and pricing pressure. But in fact, fabricated metal kind of seeing a bit of demand. New order level have increased and are better than expected. We suspect our customers are trying to build inventory at current price to get ahead of expected tariff and related cost increases. We expect this surge in demand to be short-lived. Electrical equipment demand has been stable, consistent with last year. No evidence of growing demand. Tariff impact and mitigation strategies are a daily conversation. So everything is tariff. Okay, and especially for the manufacturing, also I do believe that a lot of goods are hit with tariff. Thus, manufacturing is the one that will be affected the most lah. Next we have the services. Service dropped quite a bit also to 50.8, and I think this is quite a big drop. We are kind of very close to 50, like macam going back down lah. Okay, like going back below 50 again lah. So we do have to be a little bit careful also. So restaurant sales and traffic have improved in the past month overall. Valentine's Day typically starts an improved season trend that was consistent this year. We remain optimistic about coming month despite recent news of possible recession and tariff that have not played out yet. So apparently food services seems to be doing like particularly all right based on comment, and starting to see the effect of aluminum tariff. This cost will be passed on to customer. Oh my god. they are outright telling you the cost will be passed on to customers like construction. So if the customers are willing to pay, then construction sector may not be as bearish as it seems. And it does feel like this is the reason why we are seeing the construction sector actually recovers on Friday. It's the only sector that aside from the apparel sector that kind of recovers. Okay, perhaps maybe apparel sector also says that they are passing the cost onto customer. Do we have any apparel sectors here? The apparel sector give any comments? Miscellaneous petroleum, primary metal. How about service? Do they pay any? Tariff confusion and variety of ways that suppliers are responding have had strong effect on our purchasing decision this month, causing us to shift spend and in some cases buying in advance of reported tariff. I don't have apparel here, okay, but it seems like apparel and the home builder sector seems to be the one that did quite well on Friday. They kind of recovered quite a bit. But I will also contribute this to the lowering to the yield falling quite drastically. So 30-year yield actually fall about 1.36%. So the ISM, both ISM went down by a bit. Okay. So hopefully with the ISM coming down and with the inflation, hopefully in April coming down, maybe in May we can have some kind of what do you call that? Rate cut that will come in. Okay. So that is my overall comment on what we are facing right now. So it is just to let you know what is ongoing, but on our end, we don't really have anything materially changing our strategy overall. Okay, we are simply going to find some longs, find some shorts, and then we keep everything neutral. Okay, we are not. I don't want to be overly bearish. Also, we will just keep a neutral portfolio for now. So now onto the portfolio. Not much have happened aside from taking loss on Alcoa. So that is the only trade that was taken last week. Okay, loss on Alcoa. So now the portfolio is down a bit. The portfolio is down to 5,000 plus, $5,700. So year to date ROI 1.92. So that's basically what I have closed. Now onto open position. Okay, so now open position, you can see I'm down about $13,000, almost $14,000. And the entirety of this loss is coming from this one position alone, okay, which is the S&P 500 futures. So if this position wasn't here, right, you can see that I'm quite big in profit. It is just that position alone is causing the decline. So now you may be wondering how come there is no stop loss for this. And the whole idea behind this particular position is that it is what I would call a background beta. Okay, so this is a future on the S&P 500. It will be running in the background 24/7. So there won't be any closed position on this, but it will just be running on the background. And this contract will expire on June 20. But even when the June 1 expire, right, I will be rolling over like how you roll over option. I will roll over to another 6 months. But basically, it will be in the background consistently running to give me some level of long beta exposure. Okay. So in the meantime, as the market is dropping recently, right, what I am personally doing is that I am aggressively shorting. And in fact, a lot of my short position have much larger lot sizing than I usually do. Starbucks actually have a very big lot sizing, and you can see here my Starbucks already in profit about $20,000, Palantir in profit about $5,000. Beautiful Source, unfortunately, Friday recover, but it is in profit about $2,500. So now, what I will be doing with this position in place, right, is that I'll be placing more shorts than usual. So on your end, right, please don't go overboard with the short. The only reason why I will be playing more shorts than usual is that I have this particular position there. And eventually, I will be taking profit on all the shorts. And when market does recover, this one will ride out the uptrend. Okay, this one will eventually ride out the uptrend, and then it will remain in the background in order to be exposed to whatever the current market is happening. Okay, so at this point in time, I'm not really too worried about this also, mainly because I am earning quite big from Starbucks. I'm earning a little bit from Palantir, but hopefully if market continue to go further down, right, I'll be earning more. Okay, I'll be earning more from Starbucks, more from Palantir. Beautiful Source is a vertical, but it is a very aggressive vertical also at 105 and 905. So looking back at Beautiful Source, right, 105 is still very far off. 95 is here. Okay. So there is still a lot of room for this to go down and hit the short strike at 95 strike price 95. Okay. So there is a lot of profit to be gotten from Beautiful Source also if things were to continue to go down. So Palantir obviously went down by quite a bit. So in fact, Palantir was a very I would say I wouldn't call it a last minute entry. We have been planning to enter Palantir for quite some time already, but we managed to quickly get it in like almost right before the tariff coming out. Okay, on the 28th of March, which was like 3 or 4 days before the tariff news comes in. Okay, so Palantir doing quite well. I think give even without the tariff, right? I think Palantir is like already very overpriced. Okay, and now that we have all the tariff coming in and the overall the US government trying to cut down costs, right? I expect this to go down even more. I'm looking at about $50 level. My initial long position when I was bullish on this, my target was 75. That was my target for the top. And I do think that 75 would be the top, but it just did like a last hurrah. Okay, last hurrah. And when it start to go down, right, I think it can go down somewhere to $50, $40, that kind of level. Okay, so Palantir, we just let it be. We just leave it there and see where the market takes us. And then we have Starbucks. Starbucks don't need to say really. Okay, now Credo, unfortunately, Credo not doing well, but Credo was definitely paired against Palantir also. Sorry, it's the other way around. Palantir was quickly entered to have a pair against Credo because both are in the AI sector. Okay, so if things were to be very bad on the AI front, right, at least there's something that is there to buffer Credo, and that's the reason for Palantir. So now it is working as intended, is working very, very well. Okay, so now Starbucks bringing in majority of the money right now. So S&P 500 futures background beta. I have mentioned this already, so not gonna cover it too much. This one I feel like taking profit on this on Monday. I don't want too big exposure, so I'm going to just get rid of this on Monday lah. Okay. So Crystal Biotech, I'm not sure if you guys have Crystal Biotech because it wasn't really an official trade call, but compared to the rest of the market, it is hanging on quite all right. Okay, it is hanging on quite all right. So I mean, it is a biotech company, so obviously don't really have a very big correlation with the overall market. Beautiful source doing quite all right, and I believe Friday rally was in response to the yield dropping. But if going forward, consumer spending power is hit pretty badly by tariff, right? Then this will continue to drop, okay? So once again, even without the tariff, I do think that the overall construction sector is severely overpriced also, much like Palantir, okay? It is very, very overpriced. So even without the tariff, right, I do foresee this going down even further. But now that with tariff coming in, right, they say they want to pass down the aluminum cost onto the customers. Okay, but what about the wood? What about copper piping, wood products? All these kind of stuff are coming also. So they will definitely face margin pressure also, okay? And if the consumers are not willing to buy all these overpriced houses, then we may see a much bigger drop coming in on the construction sector also. International paper, unfortunately, it was hit very, very bad also. But in fact, right, I would think that international paper was hit very unfairly. Uh, Much like Alcoa, I don't think Alcoa and international paper were they would be severely affected by tariff lah. In fact, they are meant to gain from tariff, not get any negative impact lah. But I do believe this overall drop is a mass market drop. On top of which, the fact that recessionary fear, a fear in growth slowdown is the one that is affecting this. But if let's say the growth were to be able to sort of maintain, it wasn't as bad, then international paper along with Alcoa, right? I do think that the recovery can come in, okay? And in fact, even for Credo also, Credo have fallen very, very low already. And given the amount of earning growth, the revenue growth that they have, right? I do find that during this May earning, right? Tariff or not, it should rebound significantly lah, okay? But the current structure that we have for Credo, which is 60-60 right now, I don't think that is gonna play out at this moment because now to 60 is like 79%, which obviously is going to be very hard lah. Okay, so what's going to happen is that I will probably get rid of Credo and then I will re-enter it again at a lower price lah, okay? And at the same time, right, I'm already profiting from Palantir, which more than make up for Credo losses lah, okay? Which is why I really don't mind entering Credo again, mainly because to me, overall, this pair is a profit pair lah, okay? And if let's say going forward, Palantir continue to drop some more lah. Okay, so keep in mind, Credo, we may restructure in the future. And lastly, Bilibili, I think this is the most unfortunate case, dropped by about 13%. And I will also say that Bilibili was very unjustified also. It is Bilibili, 100% of Bilibili's business is in China. So I'm not sure how tariff will affect them lah. But eventually it got hit along with the mass market also lah. Okay. So we would not be able to wait for the earnings. So highly likely that Bilibili will be hit with a maximum loss lah. Okay. And in fact, it is very I would say unfortunate that we were not able to capture any kind of profit somewhere around here lah. So for those who managed to exit previously, right? I would say that was a good decision. I personally underestimate the China tariff lah, the impact of China tariff lah. So this is something that I believe could have been prevented, but unfortunately, the appropriate action wasn't taken lah. So anyway, with all that said, right, you can still see that overall my position is still quite on the bullish side. Obviously, Billy is gone now. Okay, so there will be 4 bullish, 3 bearish, and perhaps I may be looking to enter one more bearish trade. We see how lah. Okay, on Monday we see how market open. So now on Friday it is a Hong Kong holiday, so Hong Kong market is closed, but Hong Kong futures, Hong Kong CFD actually dropped quite a bit. So the reason why I am mentioning this is that when market open on Monday, right, I will think Lenovo may drop further also, and both the US tariff and China tariff will definitely affect Lenovo lah. Okay, so I'm guessing this one will drop a bit more also. But nonetheless, right, I have mentioned Lenovo is a long-term position, and hopefully when things kind of settle down, right, I'll probably buy a little bit of Lenovo at a lower price. Of course, at this point, don't catch the knife yet lah. Wait for things to stabilize a bit. I'm not sure how much it will fall, but wait for things to stabilize a bit, then hopefully we can get a little bit of position in now. Okay, so that's mainly for Lenovo. And once again, right, this is a long-term holding. Overall business is still very good, but we see how it can ride through the tariff lah. Okay, so that's covered my portfolio. So now going forward, some of the short position that I'm actually looking at, probably Dropbox. I'm looking at Dropbox short. But aside from that, I'm looking at Dick's Sporting Goods, also this Dick's Sporting Goods short, which can have a lot more potential downside coming in also lah. Okay. I was looking at Fiverr short, but Fiverr already dropped by quite a bit. So we will focus a bit on Dick's Sporting Goods and Dropbox. So another thing is energy. Okay, so now energy is actually a very pro-inflation kind of play. So if you expect expect inflation to go up, then obviously energy are a good play lah. But now that China is hit with a very big tariff, right? I would also think that the overall growth in China may slow down than what was expected before the tariff lah. Okay, so if China growth slows down, then it is highly likely that the demand for energy in China will not be that great also, which will kind affect the overall oil and gas sector also lah. And you can see oil prices drop 6%. That's like crazy. So this 6% drop is also supporting our thesis of growth slowing down, recessionary fear lah. Okay, so maybe we can start looking for oil and gas short also, if that's the direction that we are heading. Okay, it's something that we can consider. So now on the long side, for those who have not gotten into Crystal Biotech, you can actually consider Crystal Biotech. But in this case, right, I would advise stock position, not option position, because the options are very expensive and it's very hard to profit from option position for Crystal Biotech. Okay, but because the option position are very expensive, right, you can try to buy like in blocks of 100 shares, and then you can actually do covered call. Because the call are very expensive, right, you actually get you get quite a substantial amount from your cover call. In fact, I have 200 shares, and I have a cover call at strike 200, which will expire in May. Okay, And that was about $10 per option at strike 200. Back then, Crystal Biotech was around 170. Okay. So it is very attractive premium, and I'll be getting about $2,000 from that covered call alone. Okay. So it is something that you can consider if your portfolio is able to um afford 100 shares of Crystal Biotech. So 100 shares will be about $17,000. Okay, so that's Crystal Biotech. And on the long side, yes, Crystal Biotech. The other one is actually Shake Shack. So Shake Shack is definitely will be impacted a bit by tariff also, but of course, Starbucks will be hit by tariff. So for Shake Shack, right, it is more of upside hedging, okay? In case tariff were to be removed or whatever for whatever reason, then I do believe Shake Shack will benefit quite significantly also. So it is something that I'm looking at. So just now within the ISM also, we do see some positive comment. They remain optimistic about upcoming months despite recent new or possible recession and tariffs. So hopefully, Shake Shack is one of the positive exposure to the restaurant sector that we can take lah. Okay. Mainly because it's quite volatile, it's quite cheap also. So I think this is quite good. Next one, Celsius. Okay, Celsius surprisingly doing very well. It has been handling the overall tariff situation very, very well. And I think it is mainly because majority of their shipment is in US lah. Okay. So it's very similar to Molson Core. Very, very similar to Molson Core. Where's Molson Core? Very similar to Molson Court, it has been surviving quite well. Okay. So it is one of those few companies that have not really much impacted by tariff. And they are also in that very niche space of defense company, consumer staple, like drinks, like I mean, if you are scared of recession, or if you are hit with recession, right, then most likely you'll be drinking beer, okay? You'll be drinking alcohol. But unlike other alcohol company like Constellation Beverage, right, Molson Core actually produce most of their beer locally, whereas Constellation Beverage, they produce their um beverage in European, so they are hit with the European tariff, and which is why you are seeing Constellation brand actually going down quite significantly also. So Celsius Holding is probably a good defensive play if we are looking for some long position. And in fact, Pepsi also did relatively okay lah. Okay, it came back down lah, but initially it was going up during the initial tariff news, but I think Pepsi was affected by the China retaliation tariff lah. Okay, it wasn't affected by the US tariff on the second, but it was affected by China tariff on Friday itself lah. So these are some of the stuff that we are looking at lah. Okay, and worst come to worst, we may even continue to short IWN again, but based on how the market is performing, right, we may long IWM also if things start to recover and the tariff are being lessened for whatever reason. So there's a lot of things, a lot of directions, okay? And we cannot call everything right now, but we do need to have a list of action that we want to take. For example, if A happen, we want to do this. If B happen, we want to do this. If C happen, we want to do this, all those kind of stuff. Okay. And in order to take these actions, right, what is important is that your portfolio is still doing good, your portfolio is still surviving, you still have your war chest, and it is during this time you can take profit on your shots that are profiting very well, like Starbucks, and then you can add more short, add more long, whatever lah. You can respond better, you can respond faster to the market. Imagine all those people who have a full long portfolio position and now their portfolio is now burst. They will be very stressed, don't know what to do, like want to play long, also scared market drop further. want to play short also scared because later V-shaped recovery, they'll be very messy, okay? They'll be very emotionally and mentally drained from all the market crash that's happening. But for us, we are in a very good position. We know what we want to do. We have our plans now. Okay. So once again, right, I really do hope that most of you are doing well. In fact, we are prepared very well for this. In fact, most of you are prepared even better than I am because you guys didn't have the S&P futures, which I have. But if you did not have this S&P futures, then you are off very, very good. And hopefully this gives you a taste of the effectiveness of our long short portfolio strategies. Okay. Regardless of where the market is heading, we are definitely bound to earn money either way. So it is also a good in a way experience because within the last 5 years, within a very short last 5 years, we have faced almost 3 market cycles. We have one here, and then we have another one coming. Okay. So within such a 5 year cycle, right? Within such a 5 year time span, we actually facing three cycles of market coming in. Okay. And it is not that often that you will face this kind of thing. So if you manage to survive trading from that period until now, right, you are definitely doing very well. Okay. So that's all I have for you guys. So next week I will be around. So hopefully I don't have any more last minute stuff that will suddenly appear. Okay. Firstly, I got all the Myanmar earthquake, and then suddenly my dog got issue. Hopefully next week nothing unexpected will happen. Okay. So all the best everyone. Have a good weekend. If you do not have any short position, you lost some money. Whoever lost money, it is still not the end. Okay. You only lose like hopefully not so much. Okay. And it is something that is easy to recover from if you are doing the right thing. And the fact that you are subscribed to this channel, you are subscribed to Nimbus Capital, mean we are teaching you to do the right thing. And hopefully this period kind of shows you how a long short portfolio actually works when everything else is falling apart. Because when the market is running out, right, buy what also can win. So a long short doesn't make sense, but it is during this time of period where a long short does make sense. Okay, guys, all the best. Have a great weekend. See you guys next week. Bye bye.